Good morning, ladies and gentlemen. My surname is Makume. I'm from Zivunelo Secondary School. Today we'll be looking at the financial statements. Remember, within financial statements, we have income statement, balance sheet, cash flow statement, interpretation of financial indicators, and audit reports. But for today, we'll be looking at, and our notes as well. But for today, we'll be looking at our notes, note number 7 and note number 8. Note number 7, ordinary share capital. Note number 8, the retained income. Our balance sheet as well as the cash flow statement. Now, without any waste of time, we'll be looking now at question 1. The question 1, it says the Barbie Limited statement of financial position and share capital note. Barbie Limited, the information provided is for the year ended 31st August 2020. That is our financial year end. And then we are required to do ordinary share capital note and the statement of financial position. Now, remember always that we'll be guided, of course, by our answer book. There's our answer book, and then for us to do this ordinary share capital, our note number 7. Now we'll go there under information B, share capital and dividends. Name. It says the authorized shares consist of 3 million shares. Remember, authorized shares, these are maximum number of shares the company can issue to the public. Authorized shares, those are maximum number of shares the company can issue to the public. And then under bullet 2, it says that on 1st of September 2019, there were 1.8 million shares in issue. And then on this will be our opening, of course. And then it comes from our authorized shares, which is 3 million shares. Right. Now, very important that when we do this note, that we move from one bullet to another. You don't just skip, from bullet 1, you just go to bullet 3, or you just go to. Very important that you move from one bullet to another. Now, let us try to do our note. Remember, they said there that on 1st September 2019, there were 1.8 million shares in issue. That has already been provided for us. And bullet 3, we go to bullet 3. It says there, on 1 July 2020, the company repurchased 120,000 shares at 7 Rand 20 each, which was 20% above the average share price. These shares do not qualify for final dividends. Now, when you check, please let's go back to our information A. Now, remember, under information A, that's where now it is our balances extracted balances just to check if we do have the balance for the ordinary share capital. As you can see, we don't have right now. We repurchased 120,000 shares at 7 Rand 20 each, which was 20% above the average share price. Remember, when we repurchased shares, when we repurchase shares in our note number 7, ordinary share capital, we repurchase shares using the average share price, the average share price that we must calculate. Now, from the information given to us here, they say they are saying to us for the R7.20 per share was 20% above the average share price, meaning this this R7.20, ladies and gentlemen, it includes, it includes the 20%. In other words, for us, we need to work back. Now, when we work back, we want the amount excluding. We want the amount excluding the 20%. It is clear from the information given to us that the R7.20 includes the 20%. Now we need to work back. Now, how do we work back? We want 100%, and then given to us here, this amount constitute 120. Now it is easy for us now to get to our average share price, which is 6 rands. Average share price, remember, average share price, we repurchase, we use it to repurchase our shares in our note or on our note number 7. So here it will be 6 rands. Then it will be 120,000 times 6, and then it will give us 720,000. Very important that we put it inside the bracket. Remember, the repurchase shares, you put it inside the brackets. Then we can go to another bullet, which is bullet 4. Bullet 4. Just before we go there, let me just clarify this, the difference between average share price and the original price here, the whole amount here. Remember, on note number 7, we'll be using the average share price, and then on note number 8, we'll be using the difference between 6 rand and 7 rand 20 cents. Now, bullet 4, 20% of unissued shares on 1 September 2019 were issued at 6 rand 60 per share. On 25 August 20% of unissued shares. 20% of unissued shares. Remember, in the beginning, I said our authorized shares is 3 million. Am I right? Now, we have already issued 1.8 million. It means we are left with how much? We'll be left with 1.2. We'll be left with 1.2 million shares. Now, 1.2 million shares. Now, the fourth bullet comes. It says to us that 20% of unissued, this 1.2 million is unissued shares. Unissued shares. Now, the fourth bullet says here 20% of these unissued shares on 1 September 2020 were issued at 6 rand 60 cents per share on 25 August 2020. Now, we must calculate now the 20% of our unissued shares. Now, we must calculate now the 20% of that unissued shares. It will give us 240,000 shares. That is the 20%. Now, this 240,000 shares, you include it, you record it there on our note. 240,000 shares issued during at the price is 6 rand 60 cents. 6 rand 60 cent. Then it's 240,000 plus 240,000 times 6 rand 60. You get 1,584,000. 1,584,000. Now, very important here, colleagues, that I know that in terms of our bullet 4, we have issued 20%, but before then, there was a repurchase of 120,000 shares. We don't include that 120,000 shares. Those are shares that were repurchased. Now, they are not supposed to form part of. We cannot, include the 120,000 shares that we have repurchased in our calculation here. Very important that you note that. Now, the last bullet, a final dividend of 22 cents per share was declared on 31st August 2020. A final dividend of 22 cents was declared on 31st August 2020. Remember, a final dividend, it will be declared when? It was declared on 31st August 2020. Dates are very important because now, as you can see, the final dividend was only declared, a day, 4 or 5 days after we've issued the 20% of that unissued shares. Now it means it will be issued, this final dividend will be calculated on the closing number of shares. And very important that we calculate now, that we close off our ordinary share capital. Now, 1.8 million minus 120,000 plus 240,000 gives you 1,920,000. Now, like I've alluded before, that as you can see, our ordinary share capital, we don't have opening, we don't have closing here. Even on our information A, look at the ordinary share capital, we don't have the balance there. Now, it's very important. Remember, now we'll start it here. For us to get the 6 rands of the average share price, we could have said this amount here, the opening of our ordinary share capital divided by the opening number of shares for us to get the average share price. Now, same thing. Now we need to work, from the bottom up, and you know that when we work from the bottom up, we change the sign. We change the sign. For us to get 6 rand, we have divided. Now it means now when now since we are going back, we'll multiply. We'll change that division sign and then change it into multiplication. So we'll basically say 1.8 million times 6 rand, and then it will give us the opening. 1.8 million times 6 rand, it gives us 10,800,000. So now it is easy for us to get the closing at the end. The closing at the end, it will be 10,800,000 minus 7 rand 20 cents. plus 1,584,000, it will give you 11,664,000. Now that we are done with our ordinary share capital, that is our note number 7. But now let's check. Remember 1.1.2, it says they complete the statement of financial position, meaning from here we'll be going to the statement of financial position. But very important, when you go, before we can even attempt to do our statement of financial position, to transfer, it's very important that we transfer the totals, our totals from our note number 7. Very important, before we can even attempt to do the statement of financial position. Like here it is our closing 11,664,000. Right. Now you check. You transfer it to the face of our balance sheet, and then it's here 11,664,000. 11,664,000. Then you can edit somewhere 11,678,960. Right. Remember the last bullet from our note numbers from information B. It says the final dividend of 22 cents per share was declared on 31st August 2020. A final dividend declared. Remember, I said it will be calculated on the closing number of shares. Very important also to consider before you can even calculate the final dividend. Consider whether shares repurchased do qualify for final dividends or do not qualify for final dividend. In this case, bullet 3 information B, it has been clearly stated there that they do not qualify for final dividends. Now, basically, in our note here, this closing number of shares, 120,000 of the repurchase shares, is not included in here. It's not included in here. So now, and then ours will just be to say 1,920,000 shares times 22 cents. Because information B bullet 3, they said to us that shares repurchased do not qualify. So now this amount, this number of shares, this total number of shares here, do not include the 120,000 of the repurchased shares. Now, when you go to the face of our balance sheet under current liabilities, we are going to record that dividend declared, but we'll record it as shareholders for dividends. Shareholders for dividends. And then very important again that, ladies and gentlemen, we write our workings inside the brackets. Our closing number of shares is 1,920,000, and then at 22 cents. Then 1 million. Our total there would be 422,400. Now we are done in terms of transferring totals from our note number 7, ordinary share capital, and these are easy marks. These are given marks. These are given marks. At least it is about 4 marks free. 4 marks free. Now let's go back to our question. Very important again, ladies and gentlemen. Very important again, ladies and gentlemen, that before we can even attempt to do the adjustment, look at information A. See if you cannot, and transfer the totals, to the face of our financial position statement. Now, like for instance, now we have fixed asset note, fixed asset carrying value. It's there. It has already been provided for us. And then fixed deposit, it's there. It's already been provided for us on the answer sheet. And then bank, and then inventory and trade and other receivables. As you can see, it's question marks. Just go there and just record them there. Under current, remember, inventory and trade and other receivables, they fall under current assets. They fall under current assets. So here it will be inventory and trade and other receivables. Trade and other receivables. Right. And then after that we have bank favorable. Bank favorable. If the bank is favorable, ladies and gentlemen, it means our bank is an asset. Now it will fall under current assets, but here we're not gonna record the bank. We'll record cash and cash equivalent. Remember, under cash and equivalent, under this bracket, inside this bracket we'll get, that's where we'll record our bank if it is favorable, petty cash, cash float. Right. Very important that you note that. You're not gonna write a bank, ladies and gentlemen. Here we write cash and cash equivalents. We're not gonna write here trade debtors, or prepaid expense. All of them falls under this bracket of trade and other receivables. Trade and other receivables, it will include trade debtors, it will include accrued income, it will include a prepaid expense. Right. Then still there on under information A, there's a cash float of 3,000. Cash float, remember I said it falls under cash and cash equivalent, 3,000. One easy, another mark there. These are given marks. SARS income tax, provisional tax. These are provisional payments. There's a difference between a provisional tax and the tax that we get from the income statement. Remember the tax, these provisional tax payments are the payments that the company did, throughout the year. But the correct tax will come from the income statement. That's when now we'll be able to compare if now we owe SARS or SARS is owing us. The correct tax will come from the income statement. Provisional tax payments, these are payments that the company is doing provisionally, during the year. and then it's 560. You must note it. We'll get back to it. Ordinary share capital, retained income. The retained income, it's here, already given. Name. And then the loan falls under non-current liabilities. Here we'll have the loan, name, open bracket. And then trade and other payables. Trade and other payables, it falls under current liabilities, name. Okay, already given to us. Now, as you can see, ladies and gentlemen, before we can even attempt to do our adjustments, already we have 5 marks given to us. We have 5 marks given to us. Name. Right. So we're done with A, we're done with B. Now ours is just to go to C. C says there, the business sells satellite decoders. Closing stock of 1,260 units must be valued using the first in, first out method. 2 batches of stock were purchased during the year. There were no missing items. Remember what I said the last time I was presenting. I told you that yes, we do have paper 1 and paper 2. But now these topics, there are topics from paper 2 that will be integrated into paper 1, like this one here. The calculation of closing stock using Fifo. This is something that we are doing in paper 2, but here it comes out, and then we need to cater it. So very important, ladies and gentlemen, that as we are doing the paper 1, please let us, integrate the topics from paper 2 as well. Now, in terms of calculation of the closing stock using Fifo, if we are using Fifo, remember Fifo, what is important is the closing stock. Closing stock is 1,260 units. Now, this closing stock, because now we are using Fifo, first in, first out, we approach our purchases, section, and then share it from the bottom up. Now we'll take this 1,260, approach our purchases section here, and then share it from the bottom up. Now, how do we share it from the bottom up? Yes, we have 1,260 as a closing stock. Now, the last purchase is 1,200 at 1,950. And then we are left with, from 1,260, when we take out 1,002, we are left with 60. The 60, you take it to the next purchase, to the purchase before June, and that will be this purchase that took place when? November 2019. Yes, it is 1,800 here, but out of 1,800, we need only 60. So it will be 60,000 times 1,750, and then we check. We check our closing balance, 1,200 times 1,950. It will give us 2,340,000, and then 60 times 1,750. It will give us 105,000. 105,000. Then it's 105,000 plus 2,340,000. And then it means our closing stock would now be 2,445,000. Now we go back to the face of our statement of financial position. when you come here, ladies and gentlemen, very important, do your workings aside. Now, on the face of your statement of financial position, just try, bring in here the final answers. Like in this case, I know I have 2,340,000, and then I add the 105,000. You see? And then I'll get the final answer there. Now, 2,340,000 plus 105,000. 2,445,000. Very important that we do our workings aside, and then here inside the brackets try to bring the final answer. So we're done with C. Let's cross over to D. D is a loan statement from Tambo Bank. Loan statement from Tambo Bank. Balance on 1 September 2019 is 1,840,000. And then capitalized interest for the year 130,800. Annual repayment, including interest, is 307,200. Now, just underneath here, it says that the capital portion for the repayment of the loan in the next financial year remains the same as the current financial year. Right. Now, this capitalized interest for the year. The word capitalized interest means the interest is added to the balance. Now, capitalized interest means the interest is added to the balance, and then the capital portion for the repayment of the loan in the next financial year remains the same as the current financial year. Meaning, for us to get how much did we pay against the loan without interest, we'll have to take 307,200, that annual repayment, and then we exclude or we subtract the interest of 130,800 just to get how much was the repayment excluding the interest. 307,200 minus 130,800. The repayment here, ladies and gentlemen, is 176,400. Now, they say, just underneath that, they say to us, the capital portion for the repayment of the loan in the next financial year remains the same as the current financial year. Meaning, the repayment of this year will be the same as the repayment of the next financial year. Now, in the face of our statement of financial position, just underneath current liabilities, that will be paid, that will be the same, or that will be paid in the next financial year. We are going to call it here current portion of loan, and then it will be 176,400. Right now, let us calculate our loan. Remember, I said to you that the opening is 1,840,000, and then we add the interest that is capitalized, and then we subtract the 307,200 of the repayment. We just want to get the closing balance of our loan. The closing balance of our loan would be 1,840,000 plus 130,800. minus 307,200. Now, the closing balance there would be 1,663,600. 1,663,600, and then you subtract the capital portion of 176,400. You subtract the capital portion of 176,400, and then it will give you 1,487,200, and then you just place it there on top, the very same amount. Right. And then we go to the last the last adjustment, E, amount owed to SARS on 31st August 2020 is a balancing figure. Ne? The amount owed to, it means we are owing SARS. Ne? Therefore, our SARS will fall under current liabilities in the face of our statement of financial position. Ne? Here we'll have SARS income tax, and remember they said to us it is a balancing figure. Now, since we have come to the end of our adjustments, we can now close off our balance sheet. Let's try to close off our balance sheet. We have shareholders' equity, we have non-current liabilities, we have current liabilities. Then it is easy for us to get total equity and liabilities. It means now our total equity and liabilities will be how much? Uh, 11,678,960 plus 1,487,200 plus 1,097,840. Now, our total equity and liabilities is 14,264,000. Remember, this is the balance sheet. Your total equity must equal to your total assets. Now, the very same amount that we have calculated here, we must put it there under total assets. Balance sheet, your total assets must equal your total equity and liabilities. 14,264,000. Regarding the cash and cash equivalents. Now, remember, I said to you under cash and cash equivalents, I did not. Remember, I said we include the bank if it is favorable there. We include the bank if it is favorable, cash float, as well as petty cash. Now, already I've recorded the cash float. Now I must include my 864,800. Just left my mind. Sorry. Right. Now, we are there under this section here, total assets section. Remember, as you can see, fixed assets and financial assets, already the totals are there. Ours is just to add and place the total on top. It will be, the total would be, if you say 8,121,000 plus 830,200, the total there would be 8,951,200. Right, now, for us to work here, for us to get to current assets, remember, total assets equals non-current assets plus current assets. So now, since we are looking for current assets, we'll just say total assets minus non-current assets, then we'll get our current assets. So now, our current assets would be 14,264,000 minus 8,951,200. Our current assets would be 5,312,800. You can just close off this bracket here, 864,800 plus 3,000. It's 867,800. Then ours is just for us to get, trade and other receivables. We'll have to add the two totals here, inventory and cash equivalents, and then subtract it from the total of current assets. Then we'll get our trade and other receivables. Your trade and other receivables then would be 2,445,000 plus 867,800. And then we subtract 5,312,800. Then your trade and other receivables will be 2 million. Right? And then let us close. Let us look for the balancing figure there. Lastly, under current liabilities, remember they said SARS income tax it is a balancing figure. So now you add these three totals here: 463,840 plus 422,400 plus 176,400, and then you subtract it from 1,097,840. And then it means now SARS income tax, it is now 35,200. Ladies and gentlemen, let us quickly take the break, and then after the break we'll go to question 2. That will be the cash flow statement. Thank you very much.